Hello and welcome. You're watching Know Your Company on NDTV Profit with me, Somit Sarkar, and my colleague Varsha. Well, today's company in focus is Supriya Lifescience, a company which is primarily focused into the API business. But before we get into the fundamentals of the company, let's take a look at why we have chosen Supriya Lifescience as a company at this moment. Firstly, we would want to understand from the management what is the position when it comes to the pricing pressure in the API market, because API market is quite competitive, right, Varsha?
Yep.
Yeah. The second thing that we need to focus in today is the competitive landscape and the scale up that the company plans to do in the CDMO segment, which is the new segment that the company plans to enter going forward. The third question and the key question, the 20% growth commitment that the management has given, is that conservative given the fact that they're also entering the CDMO market? Will the company aim to grow much better than this 20% growth? That is something that we would want to know from the management. And when it comes to margin expansion, the company is largely backward integrated, and that has aided the company to have a margin which is much better compared to peers. But is there scope for further margin expansion going forward is the key thing that we would want to know. And lastly, the expansion plans. How does the company plan to grow further over FY27 is also something that we would want to know from the management that will be joining it. But before we go to the management, let's firstly understand what the company is all about. Now, if you look at Supriya Lifescience, the company was founded back in 1987. It's a generic pharmaceutical company which specializes in manufacturing and exporting active pharmaceutical ingredients, that is API. The company has two main manufacturing facilities, one in Chiplun and the other one in Ambernath. And after commissioning additional plant in the Chiplun capacity, the total reactor capacity for the company will be nearly 932 kiloliter per day. Now, if you look at the Chiplun facility, it has the company has around 40 APIs with presence over 120 countries. It also serves nearly 1,700 customers so far across regions like Asia, Europe, Latin America, North America, and beyond. Now, apart from that, if you look at the company focuses mostly, obviously, the company has 18 products that are backward integrated, and mostly 3 of them are also coming into backward integration going forward. Apart from that, the company is largely into API business. So firstly, let's understand from you, Varsha, what does this API mean, and in API segment, which are the main subcategories that it focuses on?
Yeah. So, onto API, what does this mean? Whenever any drug is made, the active ingredient, the main salt is an API. For example, if you're eating and, if you're consuming a pain medication drug, so the main ingredient that will reduce your pain will be an API, that is active pharma ingredient. So basically, Supriya makes this API. Now, talking about the therapeutic areas wherein they make these APIs, you have antihistamine, you have anti-allergic and anti-asthmatic, and of course analgesic. So these are the therapeutic areas wherein a company makes this product. So API is in a very simple language is nothing but the main salt, main ingredient in any drug that you eat. Over to you, Soman.
Well, yes, that's what API is, and a very good way to actually explain, Varsha, what API is. Now, moving on, if you look at the next part, the company's export market, as I was mentioning, the company largely exported. It has around 85% exposure to the export market, and nearly 50% of this export revenue comes from regulated market, while the remaining of it comes from semi-regulated or the unregulated market. Apart from that, if you look at the main regions it focuses, Asia contributes nearly 32% to the top line, Europe 41%, Latin America 17%, North America, which is largely US, just 4%, so not much of a worry when it comes to tariff, and the other markets contribute around 6% to the company's top line. But apart from that, the CDMO segment, which is one of the key segment for the company, in fact, they are looking to go big on this. So what does the CDMO segment contribute to them here, and what will it contribute actually?
Yeah, so onto CDMO, the next leg of growth for this company is CDMO business, wherein they are going into new contracts. For example, they have whey protein CDMO, wherein they are finalizing contract with the distributor, and also the validation batches are being supplied. And the other contract that they are bullish on is DSM vitamin D contract, wherein small trial revenues in Q1 has been done, and of course the full year FY26 revenue is expected at around 30 to 35 crore. And the next segment, wherein the contrast media. Now what is contrast media? Is nothing but whenever you go for an MRI, a dye has been injected so that a radiologist could see the images properly. That dye is nothing but a contrast media, wherein DVs, Blue Jet Healthcare is also into contrast media, and Supriya is also going into it, wherein the commercial launch is planned in Q2 FY26, and they are targeting 20 to 25% of market share in next 3 to 4 years. So, Soumit, the contrast media is the next, so every company has a next leg of growth, For Supriya, we know that almost API has been the cash cow for this company, although they are planning to add new products as well. But this is the next leg of growth when it comes to Supriya.
And that is what we want to know what from the company,
Yes.
how much this will contribute for the top line. But before we get to that, let's look at the rating parameters based on which we will rate the company's performance so far. Firstly, it's income statement, how the company has performed in the past and the recent financials. Balance sheet, again, whether the balance sheet is strong or not. Cash flow, how much of its cash that the company has invested is coming back to the company. How the return ratios have performed. Apart from that, we'll also be looking at shareholding, how the share prices have performed so far. What is the outlook and how does the valuation stand at this moment for Supriya Lifescience compared to its peers. So firstly, starting off with income statement. Now, if you look at the company's financials over FY22 to FY25, the 3-year CAGR has been around 10% odd. This is not a very strong growth rate, but it's not bad. It's 10% odd. EBITDA 7% growth. Margins have come down a bit, but it's just a decline of 200 basis points over FY22 to FY25. And this could be largely because of the changing product mix for the company. On the net profit front, we are seeing a CAGR growth of around 7% odd. But again, if you look at the first quarter performance and compare it with the last year, the numbers don't look that good. On a Q-on-Q basis, in fact, it has come down 21%, and this is largely because of an subdued growth in the vitamin and the antihistamine segments overall. But the one segment of the company that reported a strong set of numbers, but the other two segments had overpowered the growth, and hence we are seeing a Q-on-Q decline of around 21%. However, on a YY basis, again a 10% growth. But on the EBITDA front, we have seen a 17% decline coming in for Supriya Lifescience in the first quarter of FY26, and this is largely because of negative operating leverage Now, if you look at the margins, it stood at around 35.6%. It contracted by 330 basis points in the first quarter, and this is largely because of higher operational expenses because of upfront investment that the company had done in research and development. However, on the positive side, there was one thing that was positive, that was the gross margin expansion. That expanded by nearly 835 basis points on a YY basis, and this was primarily driven by higher backward integration, improvement in market share, favorable export mix, and improved operational efficiency. But how does the balance sheet look like here?
Yeah, so on to also one more thing that I would want to add when it comes to quarterly dip that we have seen is also because of the delay in the production facility campaign due to repair and maintenance done in their one of the facility called Lotte facility. One of the reasons why you're seeing some dip in the quarterly revenues. Now moving on to the balance sheet. So overall, if you see we have given thumbs up over here, because if you see the main thing, the borrowings, company has nil borrowing as of FY25. They have reduced their borrowings from 16 crore to nil. So one of the best thing that any company can do for itself, zero borrowings. And onto the cash and bank, also a pretty good decent numbers, though it has reduced from 158 crore to 79 crore. But overall, if you see a good balance sheet, a healthy balance sheet is what we are seeing when it comes to Supriya Life Sciences, and that's one of the reasons why we have given thumbs up. Onto the cash flow statement, if I were to talk about, okay, so operating cash flow, if you see, has increased, though on the PAT level, that is net cash flow, if you see, has decreased. Now, one of the reasons, because company is doing a lot of investments. So just to give you a breakup onto the cash flow from investing. In FY23, company invested almost 124 crore, and one of the reasons why you're seeing negative cash flow of 70 crore. In FY24, if you see, company invested almost 174 crore, and in FY25 almost 152 crore. So because of lot of investments that the company is doing, lot of capacity expansion and lot of investment is being gone into fixed assets, is one of the reason why you're seeing a stretch in net cash flow. But overall, a positive, rather a thumbs up because of the good operating cash flow, increase in operating cash flow that company has seen year on year.
Well, yes, the net operating cash flow has increased from 64 to 165 crore. Also, the net cash flow, as you were mentioning, it's negative for FY23 to FY24, but in FY25, they have still managed to report a positive net cash flow despite the investment that they have done, as you were mentioning. Moving on to the return ratios. So hence a thumbs up here coming in for cash flow. For return ratios, from FY21 to FY25, if you look at, the return ratios have come down. But again, the company has expanded its operation, has expanded its business. So obviously, due to change in product mix, this was supposed to happen. But from FY23 to FY25, the return ratio of the company has consistently improved from 12.9 to 15% and to 18.9%. And this is largely because of the backward integration that the company has been doing, which has resulted into lower cost and more profitability for the company, because of which we are seeing this return ratios improving for Supriya Lifescience from 12.9 to 18.9 in FY25, and hence we are giving it a thumbs up at this moment.
Yeah, so moving on, let's see what shareholding pattern looks like. So over here, if you see, we have given thumbs up because 68% of stake lies with promoter, a kind of skin in the game that, everyone likes it, and that has remained constant, which is a good thing. Even FII's holding has increased from, 5.6% to 6.7%, which is again a positive thing. Though there's been decrease in the DII holdings, but overall, looking at the shareholding pattern, you have skin in the game, you have good rather non-decreasing FII stake in the company. So overall, yes, a thumbs up when it comes to shareholding pattern. Onto the street cred, in the last 1 month, if I were to talk about, the stock has given a negative return of almost 2%, but on a 6-month basis, it has given a 10% return to a shareholder. And on a 1 year, if you see, a 18%. So overall, a neutral rating, when it comes to street cred.
Well, yes, given the market performance is still not bad. If you look at 1 year, 18% is still not bad. Coming on to, this is the analyst coverage ratio that we have, and largely it's just 3 analysts covering this stock, so hence not much of a coverage coming in here. But on the valuation front, if you look at, the valuations stand at 29 times as the trailing 12-month price to earnings we are looking at. FY26, based on the growth in earnings, the valuations come down to 26, and FY27 we're expecting much more growth given the fact that the company has given strong outlook as well. Hence the valuations come in much more cheaper at 22 times. Now 22 times on a thumb rule basis, it's not expensive, but when you compare it with the Aarti Drugs, which is trading at just 14.5 times forward valuation, it's kind of expensive. But its nearest peer, Newland Lab, is trading at a much expensive valuation of 35 times on FY27 basis. So largely valuations are in line, but again it is cheaper than its historical average and cheaper when compared to its larger peer, that is Newland Lab. So we are just giving a neutral rating so far when it comes to valuation. But what is the outlook here? Because that is the key to Supriya Lifescience here.
Yes, absolutely, Soman. Starting with margin guidance, as you were speaking about, we need to know from the management, because if your revenue from regulated market is growing, we want to know whether, there is a scope of improvement in margin, although the guidance has been given at 33 to 35% for FY27. But let's see what management says. Onto the revenue growth, they are maintaining a guidance of around 20% plus CAGR for, next few years. This is considering FY26 also. And they are also confident of, achieving 1,000 crores of revenue by FY27. Now, if you calculate on a CAGR basis, it comes to around 20% odd level. And H2 FY26 is expected to compensate for the Q1 disruption that we have seen, because of the repair and maintenance done in the Lote facility. But overall, if you, on the outlook side, it considering the CDMO business, considering the growth in CDMO business, and we have seen how premium valuation Newland Labs has, given by investors because of the CDMO business that they have. So outlook for Supriya Lifesciences looks pretty much good, comparing the next 2 to 3 years taken into consideration.
Also given the fact that they have given a revenue guidance of 1,000 odd crore, and if they're able to do the margin of 33-35%, I believe that bottom line could be around 400 crore, which is not bad. for Supriya Lifescience, given the fact that in FY25 their bottom line was just 188 crore. So in the next couple of years, the company can literally double their net profit from 188 crore to 400 crore. Well, that's all the parameters that have come in. Now let's stack up all the parameters and see how Supriya Lifescience has done. For income statement, it's a neutral. For balance sheet, it's +1. For cash flow, it's +1. For return ratio, again, it's a +1. So at least 3.5 on first page. The second page, shareholding +1, street cred neutral, outlook +1 again, and valuations neutral, given the fact that it is expensive compared to Aarti drugs but cheaper. So overall rating that we have got is around 6.5 out of 8.
Not bad.
And that's the same rating that the company had 8 months back when we had get. So it's actually not a bad performance. 6.5 consistently twice on KYC out of 8. So that's actually not a bad performance. Well, with that, let's also welcome in the management of Supriya Life, Satish Waman Wagh, the chairman of Supriya Lifescience. So firstly, to start off with, the revenue growth guidance that you have given of 20%, and given the fact that you're expanding into CDMO, you're launching more products, is it quite conservative?
Good morning. Thank you very much for the time. See, we will be launching 3 to 4 new products every year. That's our going to be the strategy. This year in Q1, we launched our anesthetic product, which is 300 million USD as a market. In the second thing, 3-4 quarter, we will be launching new APIs on contrast media, ADAD, and cardiovasculars. We are also launching our CMO formulation in Ambernath factory, which will give a small revenue in the Q4, and CDMO formulations will give peak revenue in financial year 28 and 29.
Hi, Mr. Wagh, Varsha this side, and welcome to NDTV Profit. Mr. Wagh, considering the margin guidance that you have given of 33 to 35%, I just wanted to understand, because of, increase of revenue contribution from regulated market, and we all know that, regulated market has a higher margin. Are you being conservative, giving 33 to 35% range when it comes to margin? Can you see more upwards in that range?
Of course, madam. Basically, if you see Supriya's revenue out of 100%, 62% we sell the product in the regulated market. And regulated market will give you the revenues only, because I always tell my team that we should have a business margins between this particular range. Otherwise, it's no use to do the business. And I'm confident my team will definitely achieve more than this, but we are a little conservative to say that we will try to keep this between 33 to 35%.
The 3 to 4 product launches that you're expecting, which means at least 1 product launch every quarter. When the products mature, what is the kind of top line addition that you're expecting that to come in?
See, the products which we normally are going to manufacture, we normally select the product where China is very strong. And we try to enter and penetrate these products in the Chinese area only, where China supplies throughout the world. Now, if you go to the products, we go fully backward integrated process with new technology, market size of 4 to 500 million USP launch in the Q3 for this financial year.
And the CDMO products that you're launching, how much, say, 3 years down the line, CDMO as a segment will contribute to their top line?
See, CDMO, whatever products we are going to launch, they will definitely add. The company will grow in 20% year to year. We will try to maintain our EBITDA between 30 to 35%. By financial year 27, we will definitely touch 1,000 crores. And in financial year 25, we did 700 crores revenue with 35% plus margin.
Also, sir, so when it comes to US market, I know that you do not have much exposure to US market as of now, but do you plan to aggressively expand to US market, considering the tariffs are now being exempted? So any thoughts on expansion into US market that you've given?
Currently, madam, we are strong in Europe and Latin America. We are definitely going to grow in US market. We are talking with some few multinationals for one of the product, which has got a $7 billion market. And the full dependability is on China. So we are going to crack the Chinese business through our US FDA plant, and we are sure we will take a bigger lead in US markets.
Also, just wanted to have your view when it comes to pricing pressure in the API segment, that we have seen over the years. What's the ground reality when it comes to, are you still seeing that pressure continuing on the API side? And also talk to us about the competitive scenario as well, because you just mentioned that we go into the products wherein China, is aggressive on that. So the two questions, one is pricing pressure on the API side and also competitive landscape in your products.
Not at all, madam. As far as Supriya is concerned, there is no pressure on price, because when we enter into the business which China is catering throughout the world, which are non-GMP plants, and today Supriya entering with this product is a USFDA EU GMP plant. So people are always welcoming us because they would like to have a regulatory manufacturing site to give these products to them.
Also, so agreed that the 20% guidance that you have given, but considering the new products that are in pipeline, say contrast media, even the cardiovascular product that you are going into wherein you don't have any competition in India, wanted to have an update. Do you have enough capacity, to handle 30 to 35% growth rate, if any you do, in 27 and 28? So just wanted to have an update on the capacity that you have.
Madam, currently our capacity which we have already expanded, we have spent almost 140 crores in the expansion plan at one site at Lote. The another site is Ambernath, where we have already invested same amount, 140 crores. And I'm quite confident with these large capacities, we will deliver the best to the markets. And I'm confident that when you expand yourself and when you have large capacities, you can always give a challenge to China. Not a big issue.
Right, sir. Sir, also we would want to understand, given the fact that you're entering into CDMO segment, how is the competitive landscape here? Could that be one of the hindrance for growth going forward, or you're not at all worried when it comes to competitive landscape here?
Sir, as far as Supriya is concerned, I believe in positiveness. We don't care for this. We are confident that the chemistry which we have already having in our hand, we go to the maximum percentage level. And the chemistry is so nice, we can always create a good site and good products. And we can fight with any Chinese manufacturers.
So you have already given a margin guidance that is 33 to 35%. But I believe that backward integration is an ongoing process. More and more products come under backward integration. So say at least after 2 years, is there scope for further margin expansion from here?
Yes, sir. We are very happy to just communicate to you that we had taken almost 25 acres of land for expansion for the future at Patalganga. And finally, after 3 years, the government of Maharashtra has given clearances from the Environment Ministry, and the possessions will be given to us within the next 30 days. So that is going to be our future, where we are planning ourselves for one API site and 2 formulation sites.
And sir, when that facility will go live, any update that you can give?
As far as me concerned, I'm confident within the next 3 years it will go online.
Understood.
Because our R&D has got almost 89 scientists working round the clock. And these people are already given a target that every year they should come with 3 to 4 products.
Understood. So till FY27, Supriya is all set, having 1,000 crore of target that you have given. What about beyond FY27? Have you given any thought? Are there any products in pipeline that will, cater the growth beyond FY27? If you have set any, target for that.
I will not be able to give you any figure, but I am confident that we will definitely deliver the best, because we always see the products which we manufacture. We have no threat from India. We don't fight with any Indian manufacturers in India. We always try to move with the product where China is very strong.
Just wanted this to understand, what is the capital expenditure that you have planned for FY26, FY27, the amount that I wanted to know.
See, capex this year almost 65 to 70 crores with revamping our old blocks, and the next 3 years we'll definitely do about 200 crores with our new site. This is going to be at Patalganga.
Understood.
Right.
Understood. Also, sir, so in contrast media, which the segment itself is growing into, double digit. You have said that you want to have a 20 to 25% of market share, when it comes to the contrast media. Just wanted to understand, considering the competitive landscape, because you have 2 or 3 companies in India which is into contrast media. What gives you confidence to have that 20 to 25% of market share? Is it, a cost advantage that you have, a cost efficiencies that you have? Any color if you could give us?
See, madam, I am confident that our R&D is so strong, they always go to the maximum percentage of the reactions. And they are confident that they will give and deliver to us. See, every product you go, there is a competition, but everybody has his own share. And Supriya, being 40 years in the industry and doing almost 94% production in exports, we are confident that we will take our share without disturbing anybody.
Also, sir, onto the CDMO segment. Now, I understand, and as you rightly pointed out, that we do not have much exposure to US. But, with Trump reducing the prices of prescription drug for innovator companies, will not innovator companies pressurize you as a CDMO player, to reduce the prices? Because if innovator companies going to have impact on their financials, indirectly that will impact you as a CDMO business also. So any impact that you have, that you can see in future when it comes to this M&N policy?
Madam, as far as the policy is concerned for Supriya, we are confident that we will overcome all these problems which are currently we are having. And our more business focused is Europe and Latin America, because Latin America, like the Brazil and Mexico, the Chinese have been given the last attempt to submit their documents to the authorities. And Supriya has already cleared ANVISA. And in future, they have 5 to 6 products which will be added in ANVISA list. And they are very big molecules, like $6 billion, $7 billion. So we are confident that US, we will take some time, but there also on one of the anesthetic product, we will close our discussion with world multinational soon.
Well, thank you, sir. That would be all, sir. Thank you for joining us and giving us your time and explaining your company in detail to our viewers. Well, that's all we have in today's edition of KYC. Stay tuned and keep watching NDTV Profit.